Good morning, viewers. My name is Imran. I'm a UK and international tax specialist. I have uploaded several videos on YouTube, but this time is very important topic: national insurance contribution in the UK. So it's useful for ACCA, ACA, and CTA examination, highly tested. So it's also useful for individual working in the UK if they are employed or self-employed, also useful for the employers in the UK as well to understand how this national insurance work, how it has been calculated, and there are various types of national insurance. So there are currently six classes of national insurance. So class one is paid by employees and the employers on earning from employment. So earning mean is the wages and the bonuses. Class 1A is paid on the cash equivalent benefits such as provision of car benefit or fuel benefits or living accommodation. So that it will be subject to class 1 NI and is paid by employer. Class 1A, sorry. And class 1B is paid by employer on PSA agreement. Certain benefit that's small and minor. So where you agree with HMRC that them being an employer, so sometime it's you wish to reward your employees by entertaining them. So and then you make a PSA agreement with HMRC. So you place these benefit on that agreement, and then you agree to pay tax on behalf of employee. And if there are any national insurance contribution due, you also pay this. So this is called class 1B NI. Class 2 is a flat rate paid by self-employed. So if you check your tax computation or tax return, there will be a flat rate. It used to be 158, now it's changed to 163 pound. Then class 3 is voluntary contribution paid by the taxpayer who wish to top up their contribution in order to preserve their entitlement to state benefit. Once you log in with your government gateway and the password, you can see that how much gap you have with the national insurance payment. So you can call HMRC and pay voluntary national insurance. So the benefit is that it will preserve your entitlement to the state benefits. Class 4 NIC is paid by self-employed individual on the profit from their trade. So there's a different rate for class 1 and there's different rate for class 4. Class 1 NIC is paid on earning from employment. On the earning, employee will pay class 1 primary contribution and the employer makes class 1 secondary contribution. So both primary and secondary contribution collected through PAYE system and paid over to HMRC along with other tax deduction on 22nd of each month where the payment is made electronically, otherwise on 19th. Earnings for NIC. Any cash payment to employee by employer is likely to be earning for NIC purpose. This will include salaries, bonuses, but does not include taxable element of termination payment under S401. So that is a different topic. Obviously, I'm not going to discuss this here. Where the employer has chosen to payroll the benefits, such as the cash equivalent is treated as a PAY income, the amount is not subject to class 1 NIC, but instead charged to class 1A. Remember, there are six categories of NIC. So one of them is class 1A, and the employer will be charged class 1A on provision of certain benefits to their employees. The majority of the benefit will not be earning for class 1 NIC purpose. For instance, if employee is given use of a company car and has a taxable cheap loan, so the benefit will be charged to income tax, but it not will be charged to class 1 NIC in the hand of employee. Again, class 1A will be payable by employer. So there's no class 1 NIC. The employee will not be subject to national insurance on a provision of benefits by the employer. So employee will pay tax on the benefit, and the employer will pay class 1A NIC on those benefits. So for 2023 and 24, the employee who received the remuneration weekly, no national insurance is charged on the first £242 per week. So this is called the primary threshold. On earning between £242 per week and 90 is the main rate of class 1 NIC apply, which is 12%. However, it's been reduced to 10% from 1st of January 2024. So the weekly limit of 967 is called the upper limit, upper earning limit. So employee also pay class 1 NIC at additional rate of 2% on the earning in excess of upper earning limit. So that is changed from like when you reach the upper limit, then the rate changed to 2%. So for employee, that is for monthly. For employee with a monthly earning period, for earning up to 1,048 per month, no NIC has been charged. For earning between 1,049 and 4,189, the rate is 12%, reduced to 10% from 1st of January, and there's a further NIC of 2% on NIC in excess of. So it means once your monthly earning exceed 4,189, any money above this rate will be charged to NIC at the rate of 2%. Below this, 10%. NIC. An employee will start to pay class 1 primary contribution with effect from his 16th birthday and will stop paying NIC when the pensioner age is reached. So it means when you reach the pension age, you will stop paying NIC, or the HMRC will stop charging NIC. Pensionable age depends on individual date of birth. Here's an example. An employee has a salary of 24,000 per annum, which is paid monthly. The employee has a use of company car, giving rise to a benefit of 3,000, which is included in the payroll. So it means it will be automatically taxed on payroll. So there's no need for P11D. The employee gets a cash bonus at Christmas of 5,000. Remember, the salary and the Christmas bonus constitute earning for class NIC, but the company car is not an earning for class NIC. It will be subject to tax, the company car. However, you don't if there's no national insurance. The employer will pay national insurance, but not the employee. It does not make any difference whether the benefit is included in payroll or not. Here is how you calculate. So remember, monthly limit, lower earning lower earning limit, so 1,048. Upper earning limit is 4,000. So between this amount, the national insurance rate is 12%. We're still talking about the previous rate. Okay, the current rate is changed to 10%. So how are you going to calculate? So remember, in December he got a bonus as well, this individual. So then it's different rate will apply here. So for the 11 months, remember his annual salary is 24,000. So you do 24,000 divided by 12, it gives you £2,000 per month. So for the first, so then what's happened is, remember, so you have his salary is 2,000 per month. So 2,000 minus the lower earning. So any money below the lower earning limit is, so that is 0%. So between 2,000 and 1,048, the rate is 12%. So per month, his national insurance will be £114. So multiplied by 11 months. However, for 1 month, which was the month of December, he received the wages plus the bonus, so making a total 7,000. So remember, there is a some amount would be there would be NIC charge of 12%. So between 1,048 and 4,189, okay, so the rate will be 12%, and then above any money above 4,189 until 7,000, because remember, in 1 month he received the bonus as well. So that is 2%. So the total NIC, so you add it up, it gives you 1689. This computation might change because each year UK taxation changes. However, so that's the way how to calculate. The NIC for director, it's worked differently. So the director, we need to aggregate his earning for the whole tax year. So it will be very simple. His annual, like take example, the previous example. That individual, if that would be a director, so he has a wages of 24,000, and then he has a bonus of 5,000, so the total is 29,000. So it's very simple. 29,000 minus, because the first 12,570, even the rates also applied for the employee NI. So that is exempt. So the difference between will be subject to national insurance. So remember, in the previous example, the NIC was high because none of the director earning, was low. Here is high, so because none of the director earning will attract 2% rate of NIC. And for this reason, it's tend to be more expensive for NIC perspective to be a director than a normal employee. So if you go back to the previous slide, you will see the employee NIC was smaller than the way we calculated for director. Class 1 secondary contribution. Now remember, primary contribution is paid by employee. Secondary contribution, that is very technical. You have to remember there are a few points. In employee contribution, the point is that 12% now currently is reduced to 10% and then 2%. Don't forget that step. Here is that there's a flat rate of 13.8%. So it's quite easy. So the current class is like 0% on the earning up to secondary threshold, because that's we remember 0% in case of employee was up to primary threshold. Here using, because it's a secondary contribution, and above this would be 13.8%. Also remember, there is no upper earning limit for employer, like the 2% rate do not or does not apply for employers. It's only for employees. Remember, when you get the wages, that wage is subject to employee NI plus the employer NI. Both your boss will pay the employer NI. Being an employee, you will pay employee NI. So there's two kind of NI. So they're both called class 1. But one is called, the employee one is called primary. The employer is called, your boss is called secondary. Here is example. Simon, age 26, with an annual salary of 30,000. Remember, so in this case, because you don't have to do that monthly basis, because for employee NI, yes, because there's a 2% element, because it's 10% and then change to 2%. Here is a flat 13.8%. So remember, the first 9,100, there's no national insurance for employer. So 30,000 minus this, and the remaining would be at the rate of 13.8%. So based on his level of salary, if Simon would be under 21, mark this one. Remember, it's highly tested, and you need to know it. There will be no class 1 secondary NIC. There's no class 1, and as long as you don't reach the employee does not reach to the upper earning limit or does not exceed the upper earning limit, there's no class 1 NIC if he's under 21. And for apprenticeship, it's 25. The age is 25. So on the following screen, you can see employer NIC for employee under age of 21 and apprentice under age of 25 is reduced from normal rate of 13.8 to 0% up to upper secondary threshold. Okay, so as long as he is somewhere in his wages is less than as 50,000, he will be safe. Employee class NIC stop when individual reach their state pension age. Very important to remember. However, employer NIC still continue. So the employer will still contribute even if that employees. There are some people, I see them in the UK, they are 75 years old. They already get one pension. So if they're still working, so they will not be subject to employee NIC. However, if they're working for anyone, so the employer should not deduct the employee NI. However, the employer NI will be paid by the employer. So employer NI will be paid to as long as the pension age is not relevant with the employer NI. Employment allowance. For each employer in the UK, that allowance is 5,000. Okay, but for a group of companies, be careful. For a group of companies, the allowance will be divided. So make sure that only one company, if there's a in a group there are 10 companies, so the allowance can be availed only by one company, or you can divide by. So it's very easy just to allocate to one company, and like in the group there are, say for example, 5 companies. So one company would avail this allowance. So then the rest of the 4 companies within the group um, is not going to have this employment allowance. So if there's one company with many employees, more than one employee, okay, so if the class 1 NIC for the year is less than 5,000, employer will not have to pay class 1 NIC because it will be covered by the employment allowance of 5,000. There is no provision to carry forward. For instance, a company has only 2 employees, but they pay small wages, not small wages, but they're paying wages, and then the secondary NIC calculated as less than 5,000 for the year. So if any employer employment allowance left, that cannot be carried forward. So from the next year, the allowance will be refreshed. We start at 5,000. But this keeps changing. 2-3 years ago, it was 3,000. There was 4,000. Now 5,000. Let's hope that they would increase it. Okay. No employment allows for one-man company. For example, if there's one-man company, only the director is like a company is run by one director and he's also employee. This is not available, and he cannot claim the employment allowance. Allowance is not available in respect of domestic staff, such as a housekeeper. If you are a rich person and you have the housekeeper, then you cannot claim that. So you can register for to HMRC for become employer, and then the housekeeper wages. So then you cannot use this 5,000 employment allowance. Relief is available where individual employees care or support worker for care for themselves or other. So if that is the case, then obviously employment allowance is available. Relief is not available, so employment allowance is not available for public authority as well. For example, a Greenwich Council, Camden Council, any council, or a library. Class 1A NIC. So remember, when it's come to the benefits, we talk about class 1 NIC. I know this is a bit confusing. This one, class 1A NIC. So class 1 is paid by employer on the cash equivalent of certain benefit. So the rate is 13.8%. It doesn't change. So remember, on benefits, the employee does not pay employer NI. However, the employer is subject to employer NI, and that is called class 1 NIC. By benefits, we mean non-cash remuneration. Many employees, along with the salary and bonus, receive benefits such as private medical insurance, company car for private use, etc. Class 1 NIC. If the payment in kind is categorized as earning, so be careful. We call it like non-cash item or cash equivalent. But if this categorized as earnings, such as, then in this case, we need to apply class 1 NIC. So it means both employee NIC class 1 primary and secondary would apply. That the benefit will not be charged to employee. In this case, certain benefit, for example, if there is a trading arrangement, okay, I give you this company car or give you certain asset, but then subsequently I will buy from you, you will receive cash. Obviously, that is earning. So that is no longer a benefit. Okay, in this case, as I say, is on the benefit, there's no employee NI. So the primary NI is only there's an employer NI in the form of class 1A. However, if the benefit turn out to be earnings, okay, in this case, both employee NI and employer NI will apply. Okay, so where an employer paid a sum on behalf of employee, the payment is subject to class 1 NIC or not class 1 NA. Or there's some kind of arrangement where HMRC see this, okay, this is not a benefit. This in fact is a wages you're paying to that employee in other form. Class 1B. Class 1B NIC are payable by employer when employer has entered into a PSA agreement with HMRC. So PSA allow the employer to settle the employee tax liability in respect of minor or irregular benefit and expenses payments. Class one, here's example. A company held a Christmas party for employee. It cost £220 per head. Um, as the benefit was not exempt because it's more than 150 per head, the company included the benefit in PSA. So the total cost of the benefit was 20,000. So and the result tax liability is 9,150. So remember, so the total cost of the benefit plus the tax liability paid by the employer, you add together and then you multiply by, so it's like a proper punishment. Okay, so better you make different arrangements. So then you apply the class 1B rates. Thanks for watching. A very important topic. If you do have any queries or question or comments, drop me a line or two. I'm happy to answer your queries. I have uploaded other videos regarding taxable benefit, exempt benefit, taxable income, exempt income, dividend, how the dividend are taxed, how the interest income has been taxed in the UK, and how you can calculate how can you work out your income tax. I'll be making more videos. Uh, if you like my videos, you can subscribe to my channel. I'm wishing you a nice day.